Okay, good morning everybody. Mike Niemiec here on this Tuesday morning, October 23rd. Well, we're starting off the week somewhat of a little bit of a lackluster trade in here. Yesterday was pretty much mundane. We saw where the wheat prices were on the defensive while the corn and the beans were slightly higher. A little bit of turnaround action now in the overnight trade. We have the wheat market up around 2 cents, the corn market fractionally higher with the beans down around 5 cents. The products were unchanged yesterday, meal and oil, but they too, like the beans, are on the defensive as well. Last week on Monday we started off sharply higher and then we faded throughout the whole week, and now here we are fading again to start off this week. Beans, meal, and oil were all making new lows for the move in the overnight trade along with the winter wheats, although the winter wheats have kind of recovered here in the early stages of the overnight trade. We are kind of defining the remaining week and a half of October as far as being somewhat of a sideways range in here, with last week's sharp rally on Monday somewhat defining the top end of the trading range, and now we're trying to seek the bottom end of the trading range. And that comes on the heels of, once again, we still have over 50%, around 50% of the harvest still to go for corn and beans. That came out yesterday. We are running well behind as far as average in beans, but slightly ahead in corn, but we're at the 50% mark. No big calamities there. The weather still looks good. We're also finding out that the trade doesn't have a big net short position built up as of yet as a result of harvest activity and or farmers selling. So maybe we have still more room to roam there. So harvest positions. And then also we also kind of look at things like stochastics, RSIs. We found out that we were quite top heavy last week, and on a rally that we've seen from reversals up in a week ago, for the week, roughly around a month ago, and those are starting to turn over as well. So kind of like to see those three kind of bottom out, warrant shorts, harvest a little bit more done, stochastics, RSIs coming on down to lower levels to go and say that maybe we're trying to form somewhat of the bottom. Because overall, when you look at the fundamentals, they still remain non-bullish. The recent USDA report shows we have enough supplies. Export sales to date are still running behind what the USDA is forecasting for wheat and beans. Corn is good, but we still have big corn supplies. We're also finding out we still have the trade wars going on. We also find out that we are having a good start to the South American season, so all that is kind of somewhat limiting buying interest at this point in time. The trade going forward in here, we'll still have the regular routine reports coming on out. Ethanol tomorrow, export sales on Thursday. But in general, it's still somewhat of a sinking feeling right now. The trade is not, once again, all that net short, and they still have room to roam. And the money flow was on the plus side for 2-3 weeks on the commitment trade report, and now it seems like it's becoming a little bit more defensive. Once again, these are my opinions, not that of ADM or ADMIS. Thank you.